Hello, everyone. Welcome to another edition of our Path Trading Partners live stream. Remember, Bob should be on tomorrow afternoon for all those who just tune in for Bob. Until then, you get to deal with me. Hope everyone is doing fantastic. Another red day. We need some green days with the red days so we get the whole Christmas theme going. I don't want it all green, and red. Although this is not to be unexpected. Good afternoon, Patrick. Ho, ho, ho. Cole. Are you going to look for any Santa rally, George? Good afternoon, Jacob. Good afternoon, Sterling. This pushdown should not be unexpected for people who tune into this channel. Good afternoon, Paul. Good afternoon to everybody hiding in the background. Real quick, what about this economic calendar since we have to switch from the other one I've been using? This one I've used occasionally. It looks pretty good. We get the consensus, the actual, the previous, the forecast, sort of the trend, so it could be handy. Today we had the NAHB housing market index missing, coming in below consensus, coming in below forecast, and below previous. So it's going down. We're going down. But everybody's ignoring housing, so it really doesn't matter. By the way, if you are new here, please do subscribe. Consider subscribing, hitting that like, and ringing that bell. All right. I'm going to stick with this one at least unless I get a lot of complaints, but always welcome the feedback. Tomorrow, we have building permits, housing starts. Nothing there's really gonna, building permits are somewhat important, but the housing's already in the dumps, so let's just leave that alone. I doubt it's going to be major market moving. Gonna pay attention to Redbook as I always do, but then that's pretty much it. Today, the mega caps taking it a bit in the shorts. Pretty decent reversal in Tesla from being up earlier. Oil still bouncing with crude going up. Oil and gas integrated companies, a little bounce in the financial companies looking up. But energy eking out pretty much a neutral day and everything else in the red. Comm services bleeding everywhere. Technology not good either. So sort of your risk on aspects of stuff that people rush to. And I'm not saying all technology is junk, but there's the overpriced technology stuff that people rush to, especially when we go into risk off mode. Or risk on mode. Risk on mode. Sorry, I hate that term. Does anybody else hate that term? Fed Watch. This is interesting to me. I know we don't have it till February, but this is starting to drop for the 25 basis points. I'm so used to saying 75 basis points. The 25 basis points and climbing for the 50 basis points. So right now the trend is actually moving up a bit on that, a little more aggressive hike. On Feb 1st, fear and greed index still in that fear mode. Am I watching for a bottom yet? Well, that ties into our next thing. After we look at earnings, I'm paying attention to General Mills tomorrow from an inflationary and consumer standpoint and how much they're able to pass on. Other than that, not much. After the close, though, we got Nike, FedEx. FedEx is going to be very important for this holiday season and any guidance they're giving moving forward, because that gives an overall sort of snapshot of the economy since so much stuff is done online. Then you have Nike as a pretty big player. Are those going to be massive market moving? FedEx could actually be market moving if they drop something, if their earnings are really weird, like to bad, or if they drop something on the conference call alluding to things are rapidly slowing down or this holiday season sort of more of a dud. That could potentially move the markets. So do not ignore FedEx after the close. All right. Are we done yet? Let's see. Royal Palms. Yes, we will still go over Spotify, as I said this morning. Thank you for coming back, and we will look at Spotify. Good evening, Charles. Really nice. Down day, hitting our clusters, hitting that 50%. Let me take off some of these little levels so it's not so obnoxious. Obnoxious right here. Remember the 50%. Now we are technically in between the 50 and the 62. We can start looking a little more so for a bottoming pattern but cycles could still run down a little more. Could still run down. Funny enough, we dipped into that 50% level. We had our significant level from this breakout area from CPI Thursday, and we're closing just above it. Looks like we still have 20 minutes to go, roughly. 38.41 is that 50% level. Where are we trading right now? 38.40.75. Well, we could just close right on that level. Does that mean anything? No. Now, it's a long way off today's high, but if we did break today's high, we would have the aggressive percent B, so I'd watch for that intraday, but we're a long way off from that since we're closing down near the lows versus the high. But the target area would only be the rolling over rotation zone and the hooking over 50 at this point if we did get that. So that would just be an intraday play, but we'd have to set up in front of it. Santa broke this Xmas. The market flipped a fear for real quick. We don't know. Well, Santa might just be, hey, Santa rallies technically not till after Christmas. Technically. Are we going to also get somewhat of a repeat from, what was it, 18 with that sell-off into Christmas Eve? I mean, Christmas Eve is Saturday, but into sell-off into 23rd? Because remember, on our new economic calendar, remember Friday, we got personal income, personal spending, durable goods, PCE price index, month over month and year over year. The core PCE, these are hyper important. They should actually be with little red flags next to them in my mind. Okay, so we have major info coming out on Friday. That'll be interesting. That's all I'm going to say. We'll try to fine tune things as we get later on in the week. So, getting also to oversold area right now in the short term, but that does not mean you just naturally bounce. All right, there was nothing really. You got this little reaction after, but that gives us a nice point. 38, roughly about 38.50, 38.49. Rally into that. You got this little clear path up there, but overall, I'm going to be paying attention if we do rally to the 1 hour rotation zone and the next breakdown zone, the minor support area from Friday. Minor support area since we broke that below it today. Little sell-off. Pause bar. Sell-off into the afternoon. Quick little reversal into the close, but I'm paying attention to this 1 hour rotation zone. And within that area, 38.56, 38.57. Higher time frames, we still have above there. Then I'm going to the 4 hour rotation zone and the 12.5% harmonic, 38.71. And the top of the 4 hour rotation zone coming in at the prior significant breakdown level, 39.10. So, Mo has a beautiful triggered weekly double bottom. We will call that one up too. Hey, George has racked up enough losses to be tax-free for the next 2 years. I hope you are doing better now, though, since you've been tuning into this channel. I hope it is helping you. That's the point of it. So that's what I'm watching now to the downside. Interesting enough, we're closing right at this key area, but we have the remnants of the remaining 4 hour clear path move. So the next key targets, there isn't much here. You can see here, there's not a lot of support until you get down to, I'm marking off another little area here, until you get down to 37.68. So if we get more push downs, especially below today's low, there's not a lot of stopping points. There's some minor like around 37.92, but there's not a lot here. Also, again, I'm going to have to use, we don't have a lot of great harmonic levels just yet. I can use these because this is still a valid pause on the 4-hour, which just now reinforces on a minor break below today's low, 38.1475, then 37.74, right in front of that line I just put. So now I got my overall target area on a bigger break if we continue down. Fantastic. All right. All right, 75% of your losses were intentional harvesting throughout the year. Okay. Easy money these days. Just wake up and short Tesla. Thanks, Elon. Tesla's been... I mean, how many people have been calling for this as long as I have? There's some out there. A lot of people gave up. Let's just jump to Tesla real quick. Now, it did bounce. We finally hit the next cluster area. Spiking below it after the little gap up, quick gap fill, and spiking down. By the way, a break of today's high, if we do start getting a little market rally in, is an aggressive percent beat buy for a return to the rotation zone, which risk reward is going to be challenging unless the intraday play can be turned into a daily play. But with it being so oversold and anything else, I am watching out for any news that could trigger this, because the next major target, 129, and then we have this, it's been on the charts forever, 107 to 112. Does a bounce invalidate any of that? No. So that's where we sit right there. I'm actually looking for a rally, because then it will be interesting to get the next short play set up. A rally would be a little gift in Tesla. Where do we sit now? By the way, forget about this bigger pad. I just forgot to take it off. NASDAQ. Boy, since the Tesla, did you see, since it joined the S&P, since they put it in the S&P, it's down 31% overall since joining the S&P. Little hurt on the S&P there. Look at this now. Look at this. Yeah, we did drop down a little, but look at this on a closing basis. Remember, 11,180 is the key closing level on the NASDAQ we're watching. Right now, we're trading 11,178. So the next 10 minutes will be interesting to see if the probabilities do shift. And we're closing right at that harmonic from the reversed harmonics. So that's about it. We, again, don't have no great pausing bar yet. I am going to be watching now the return on any rally. 11.3 is the first area. And then 11 about 4.30. Those are my two key areas, and this above 11.3 takes us into the 4-hour rotation zone for a potentially bottoming short-term pattern, with 4-hour cycles getting to the bottom and getting oversold. But is it just a buy yet? No. The only daily thing would be a trade above. I mean, there might be something that sets up overnight, but the only daily thing would be a trade above today's high for a little bounce, but you're never going to get reward to risk from my perspective. Cycle's getting to the bottom, but could take a little longer to turn. The Dow, still, I am focusing. I think before the Santa rally, we're going to test the 200. 32,447. We're closing below the 50 now. So last Thursday, technical damage closing below key support. Friday continuing, but closing above the 50. Today, closing below the 50. We still have that harmonic. I'm still waiting for a stronger pausing bar here too, but we have a key harmonic from the longer term harmonics in here and the 200. Rallies for this, just watch your rotation zone. Is this a little mini double? Yes. This is this is flat enough that this is a mini double. And of course, I would be using conservative targets with it. So that's the only, let's see how that would play out. See, that would just take it back to the first cross of the rotation zone in the prior breakdown area. So that's the only little bounce bullish trade. But I definitely need that 4-hour close. Oh, it would have to be on a closing basis above 33,279. Russell. Oh, poor Russell. Looks like it's also going to close above the 62.5. Look at this. Closing, just testing that key thing. Bam, and going to close above it. So on a rally, 1763 is my first key target. I'm still watching. If we do now break below 1744, be watching that on closing basis, but we don't have any great support till the 75 harmonic and this little support ledge. 1711. Now let's peek in real quick at the Spideys. The Spideys, based off this being oversold in this, I essentially said second target hit for my own stuff. We filled the gap to the gap open price, but not to the gap close price. I'm still expecting this to head lower. Can we get a bounce first? Yes, we could. So, but this is definitely move stop down. This was take some partial profits area and take final profits. I'm actually going to bump up the final profit taking area to just around this closing, just in front of this. I'll make it a zone. About 374.13 to 373.28 is a target zone to complete this pattern. Technically, it's 373.28. I'm using it as a target zone. Let me take those off. So that's really about it. My key level on the bounce, we'll cover that tomorrow, but 382.31. The Qs. Now the Qs close below the 62.5. Futures are stronger than the Qs though. Futures are stronger. Better probabilities. So I'm watching but it is interesting that the Qs did close below 7.5 and pretty much at our harmonic projection, the weaker harmonic projection since it was only a 4-hour pausing bar. We break below today's low though, 266.54 and then 264.91 are the next two targets. Remember, you still have a gap fill. It didn't even manage to fill the gap yet to the open from pre-CPI Thursday, the Wednesday. So we still have this gap fill I'm really paying attention to. All right, DAX. Oops. Want to cover a couple of things, then we'll get to Spotify and MO. DAX still holding. I'm still watching for it to connect to this 50. And then if we close below the 50, reconnect with the 200. Other than that, cycles still have a little way to bottom, although it would be a super aggressive buy pattern above today's high that would transition into a daily close only. Otherwise, this is no hold. Notes, there's not a great setup just yet. So it's pretty much, this is consolidation. I'm really watching for the break below this 113.24 area. Dollar index was very interesting today. Sell-off and then a rebound outside day to Friday. This was a little pretty bullish pattern with the intraday sell-off. Now, is this mean a super big rally? No. On a break up tomorrow, 105.10 and then 105.64 are my two upside targets. When that would be with a stop below today's low. The VIX, with the market down, the VIX down, but the VIX, we just had OPEX on Friday, or big quarter, and so much the stuff is now being done on short-term options. I'm sort of, unless we get a major spike in the VIX, not paying attention to it right now. Crude nearly an inside day, but not. The only way I can get short-term bullish is above this 77.82. Other than that, sitting on my hands, no great setups there. Real quick, Natty Gas, gap down, gap down. Still watching for a better setup here. It's overall in consolidation with the breakdown, return to consolidation. Nothing, but nothing much there after reconnecting with the 200. So that's a sit on hands. Gold, sit on hands unless we break below the daily rotation zone at 1781. I didn't go over this the other day. I don't think I did, but we talked about it before. We had that double trigger in copper. So I'm still watching for the correction, especially back to the 50, 368 area. The yen, I'm really paying attention to this 200 at this point. The breakdown play for me is now key close below 135.76. The breakout play is, let me take that level off. The breakout play, 138.63 area. So right there, that's what I'm watching for. In overall sense, this area is real key because it's the crossing of the rotation zone. But there's nothing else really great. So many of things are crappy right now. They're caught in no man's land. Euro's still holding right at the rotation zone. We break down below today's low. I'm still targeting the bottom of the rotation zone, about 104.80. Pound, I'm watching for a reconnection with the 50 area. About high side would be about 119.50. Still watching though for a breakdown. We need to break down below these double lows. Not double bottoms. This is not a double bottom pattern. This is a mess. Although if you do break above about 122.40, we could see a decent rally back up. A rotation rally back up. Bitcoin still holding. I'm watching for, I think the next shoe is going to drop sometime in the next few days. On that, we already looked at Tesla. What else do we have? We have Spotify. What was there is no double. By the way, this is not a double on Spotify. This is now a triple, quadruple, triple. It's a mess. Sitting here bouncing off our long-time harmonic. But the key thing I'm watching for is a break below 68. 68, and then I'm watching for continued lower prices. Continued lower prices in Spotify. My next, I will not be surprised to see it reconnect eventually sometime next year with 32. It will not surprise me. But there's nothing. If you did, the only upside trade is if you're looking for something, there's might be a couple short-term patterns kick in. Let me get this, zoom in. But beyond that, the only more significant pattern is if you did get a daily close above about 87 area. That would take it back above the 50 on the daily. You have a gap then play up here. So that's the only thing I'd set an alert for if we do get some Santa year-end rally and people start buying stuff that's just going to go lower next year, which wouldn't surprise me. Remember, EPS is still negative on here. No PE still. But if we did get an end-of-year rally and it did manage to get above this 87 area, I'd be watching for the gap fill and then a potential reconnection with the 200. But that's a very aggressive upside play. I would rather be looking for another shorting setup. Mo, which is there we go. Mo, which is a stock I love, which triggered the double and has had the 3-week stair step down pullback to, and where do we watch? We watch between the trigger area, the high, and the candle bodies for the pullback plays. So far, it's a really nice pullback play, allowing people to get in. Is this a potential double top? Yes, it is. We always remember, always measure stuff out. I would only be using conservative targets. Would that invalidate the double bottom? No, not at all. But there's no stop raise on this. So on a closing basis, the stop is still 42.65. And with the pullback given multiple entries to even get in better, that's, you have good reward to risk. So if this did break down, it would not even come close to the stop area. But it's already chipped away twice at this 200. I actually love this. Even with the pullback. Why do I love this stock? PDE is still a little high, yeah, but the dividend yield, 8% dividend. So we have a bullish pattern. We have an 8% dividend. I mean, this can even be, you can trade this because of the dividend with a little, you can even use wider stops. Earnings aren't until beginning of February, right after next Fed day. What's interesting, though, is if this chips away for the third time, a lot of time, third time's a charm to break through to 200. So I love this stock. That's all I can say. That's not investment or trading advice. I like it because it's a consumer staple. Its PE isn't overblown and it pays an amazing dividend and it's not going anywhere. These are the kind of stocks that are fully tradable around a core position. And when I say that, tradable around a core position, I do not mean dollar cost averaging. Dollar cost averaging and tradable around a core position are very, very different. A lot of people are going to get blown up out there trading around. I mean, not from trading around a core position, because there are times you really lighten up trading around a core position. You can even eliminate the core or go down to next to nothing in the core and wait for a more significant bottoming pattern. People who have not experienced, there's a lot of investors out there now who keep saying, they keep doing their fundamental analysis. Well, like Tesla, it was a buy at 225, it was a buy at 200, it was a buy at 180, it was a buy at 160, and then they just keep dollar cost averaging. I'm just going to keep, well, that works unless you get into an extended drawdown, and a lot of these growth stocks are really going to get hammered, in my opinion. And if you run out of position size, it also puts all your eggs in a lot of baskets. Whether we're trading around a core position is saying, I will take up to this position size. It might be 2%, 3%. Some people do it up to 5%. But that's the maximum size I'll take on, and I will identify key levels beforehand, and they're done off technicals, not fundamentals. Fundamentals are interesting, but technicals trade way better than fundamentals from managing positions, getting in at key levels, and based off of probabilities. That's why you see so many people chasing things lower when the fundamentals deteriorate, because their fundamental target prices keeps ratcheting lower. Because not only can you get earnings compression, you can also get multiple compression. All right. You racked up a 10K harvest on Tesla, but if I was still in Tesla, I'd be down 40K. Well, I'm glad you're not still in Tesla. Dark screen sleep. We've talked about this. The penny stocks aren't coming back anytime soon. It's done. Yeah, there might occasionally be some little ramp up, but they are done. A lot of these people are also now getting caught up in the SEC. There's no more pump and dumps. They're cracking down on it finally after so many people have been hurt. So hopefully you can take some losses to offset tax implications. Again, I'm not an accountant. You need to touch your accountant, but we're in that year end selling stuff, that you can use for tax losses to offset your taxes. So if you have gains from other stuff, you might want to look into that and close out positions that are going nowhere. Free up capital so when there are good positions in some things other than penny stocks, you can get back in. Will the market retest the low? Well, let's just see. Where do we close? Why am I looking at where we close? See, I didn't get the probability shift in the NASDAQ yet. I was going to say if the NASDAQ closed below 62.5, I'd see a retest of the low area, but that probability hasn't shifted yet. Would I expect it to get down here before the Santa rally? If we do have a Santa rally, no. I'm not expecting it. Based off of we have a lot, look in the NASDAQ. This is major prior support. We have a lot of support down here. It's going to take a lot to really blister through it in this week. Now, we can get some bad numbers come out, and it could happen. The S&P is well off of it. The NASDAQ, if you're going to get a retest of low area, it would happen in the NASDAQ and the Russell before I'd expect the Dow and the S&P to get close. However, you know my line in the sand. 37, 55, 25, right here on a closing basis. Other stuff. Apple, major, remember, we talked on Friday. This was the low close since your June. Today, we finally, look at this, finally filled the June gap. Finally filled the June gap, and we hit 131.48 along with the June gap harmonic. Kabam. Still watching now. The 135 level on any rally in Apple is key resistance, and then about 137 with the declining rotation zone. So Apple has pretty significant technical damage done. I shall be watching for another, on a more significant bounce for a rollover play again in Apple. Just want to look at some of these real quick. Microsoft. This actually might be a double that didn't hit, that stalled out at the 200. But watching on a closing basis, key line in the sand for me is 240.33 area. Right now, we're trading a bit lower. I'm sorry, 237, sorry. 237.78, not 240.33. 237.78 on the closing basis. And no, it didn't technically hit the stop reduction, but this is utilizing a more aggressive stop reduction at this point, 232.36. Although, see, it's trading the 50% of this run up, so we start breaking below that. It's not going to be good for Microsoft, but Microsoft's still holding up a bit better, but not well. Google filled it to the open. We still have a gap closed down below, and I'm expecting Google. And we still have the gap from Friday, November 4th to Monday the 7th. We got that probability shift on Friday. I'm still expecting Google to retest this 85.70 area. Amazon, and I'm going through the mega caps for a reason. Amazon also, major technical damage today. Why? The close below the November lows. Look at this. A new closing low. This is the lowest levels since March. The COVID lows. Or is that the COVID? Yeah. That was the big rally that started with the COVID rally. Look at this. We're almost back down to that gap open major reversal bar. Also remember, we closed back below the 62.5. back in May. Little bounce back rally, but that probability shifted to retesting 80.76, and we're well on our way there. So would not any rallies in Amazon are to be sold from my perspective, because we still have lower prices ahead. We've already done Tesla. What else? Yep. Also, think about your tax. Very good advice, George. Think about your tax situation before taking a gain. Again, that's why you need to talk to your accountant. You do not come to a YouTube channel for accounting advice. Speaking of trading around a core position, Intel has closed below 62.5 of the recent run-up, getting close to Yeah, this is why it's, remember I said, great stock. Great stock. Down here is a fantastic reload area. That's why I like to take some off on the rallies. You put stuff back on. Okay? So, again, that's very different from dollar cost averaging. Would not, probability wise, says we should still return to 25-40 area. Oh, yes, or else Netflix, Nvidia. Netflix still holding against the 50. That's the key level I'm watching. We start getting the close below the 50. Or if you want a little more conservative, the close below about 281. 281. A close below this level right here, which takes you below the 50. Easy target for me back to the 200. The only thing I'd be watching for if we don't close below this, if we did manage to take out the high from Friday the 16th, we got a nice gap fill play. That would be the only bullish setup I have at this point. But I need price action or a more substantial thing. I'll be watching for short setups in this again. Disney's getting the snot kicked out of it too. Nvidia. Again, long term, this is another fantastic short. Short term, I am watching actually for a bounce at some point in Nvidia and then setting up for the rollover play. It's coming into a lot of support right here with the 50. So I'm going to be watching for more of a short-term bottoming play, a bounce, and then a more substantial rollover play. And will not be surprised to see a reconnection with the weekly 200. And that could be sometime after the first week of January. Unless the market really gets the crap kicked out of it. But the first warning sign would be on a close below the 50. Hey, Dave. Hello, options 22. Upward sloping channel on Netflix on the weekly. There is an upward sloping channel. So, you know, you can put it on here. It's not really going to change much. I'd more be watching this key area right in here, the breakdown here. But if you want to be a little more conservative, you could use the upward sloping channel. Once we break down, the 200's really the key target area. Then if it drops below the 200, would not be surprised to see a reconnection with about 220. Let's just see where that is in terms of the run-up. I'd then use 226. Now, I did get asked by more than one person, There's been some videos out by a number of people. A couple have been highlighted to me talking about next year earnings from a fundamental perspective, the pricing of the S&P and other stuff, or what my thoughts are on them. Well, why I use it as sort of a back of an envelope. I expect earnings to be back below at some point next year, below, especially possibly Q2 earnings below $200 a share. My area is closer to 192, and I expect the PE multiple to drop below 15 for the S&P. I mean 192. 192 with a PE ratio. Now, where does that put me? That puts me a lot lower in price. You can do the math. But one of the problems is, with fundamental analysis from my perspective on the broad market, is you have two things you're trying to identify. It's not like earnings are fixed. And there's no fixed on PE multiple, especially if we get into, especially if inflation does not come down or gets stuck. Let's say it gets stuck above 5%. You know, it drops from 7 back to 5, and then it stubbornly stays there. We could see a PE multiple in the S&P closer to 12. All right. So I said 15 to 12. Now, where are earnings going to land? That's another whole story. Then they're notoriously hard to nail the exact area. So we have two variables which can swing fairly widely and give you huge zones for targets. It's why I also don't agree with, if it gets to some area, people just say, I'm going to back up the truck. Like I know people have said, if we get to 3,300 or 3,000, from a fundamental perspective, I'm just going to back up the truck. That's very dangerous. Or I'm going to start dollar cost averaging. Why I use technicals are because we're not trying to call the low. We're not going to call the absolute low. We're going to call when the probabilities shift. Now, what's a key area for me? I'll tell you right here. On the next break lower, which we will hit, is around 31.66. Do I think it's going to stop there? No. Overall, at this point, and because markets can overshoot, and that's where it shocks people. Especially if we get a bigger pullback. My technical key area is 28.30 roughly, and then 25.04. If it hits 28.30, am I just going to say, okay, I'm just going to start buying? No. But this zone right in here is going to be very key. Do my fundamental guesses could it put it somewhere in this zone? Yes, very easily. But am I just going to be buying because fundamentals hit something, or no? We identified these levels have been on the chart forever, for a very long time. I don't remember when I put them exactly on, but they've been on for months. And I don't need the fundamentals. Fundamentals, that's why it's more of a hobby. Yeah, I will look at some things, especially for individual stocks. But once you start seeing multiple compression and earnings compression, it's notoriously hard to call a fundamental bottom. It's easier to call a technical bottom. From my 30 years, what am I going on next year? I'll be going on 31 years next year of this. That's why I stress. Yes, we occasionally look at the technicals, and I will do for more stuff that are bigger investments, I will dive deeper into fundamentals. But to just for me to project an earnings per share and a multiple of where it could expand or compress to is notoriously hard versus technicals have been from my stuff have been proven to have a much higher accuracy rate. Now, are there very good fundamental analysis people out there? Yes. But I have not found, I can't recall one that I've found that is more accurate than just pure technicals, if you have some good technical patterns. So, that's where we sit. I think being able to combine them is also a wonderful skill. But if you had me have to pick one or the other, I'm going to lean on technicals over fundamentals. All right. I think we went through everything from that perspective. You're welcome, George. Your tip on MO and these are the time, especially because when you get a dividend for dividend playing stocks that have already been beat up, that have a nice PE already, can MO contract even more? Yeah. But look, you're getting an 8% dividend. That's why I'm still going to glance as why specifically will use some fundamentals. Can this come down? Yeah. Can earnings come down? Yeah. Price can come down? Yeah. What's great is if price comes down, the dividend yield goes up. I love it. Love it, love it, love it, love it, love it. Here's another key thing. If we're trading around the core position, well, guess what? If we start closing back below 40, 70 roughly, let me take off a little here. 40.74, you get a close below there. From trading around the core position, it's lighten up. And then look to re-add down here for me. Yay. Or unless we got a major bottoming pattern before that. So it's lighten up, ride it down, re-add. Higher dividend yield. Just like when there were some nice buy setups over in here. Ride it up. Unwind a little. Start looking for pullbacks to add. Hope that makes sense. And you've got a great cushion with a dividend yield. And this is why I love to leave something on for dividend yield stocks, because you can always keep that dividend coming in long term to help offset any price declines. If you want to get good at some long-term investing, learn to trade around a core position, especially when on some good paying dividend stocks. You get good at that. And you can really do some wonders for a portfolio. Just my 2 cents. Investigate it for yourself. Like here's another thing with Intel. Especially, I think we're easily going to hit the 75, but what happens when we hit the 75 harmonic? What do we potentially have here then? This would be beautiful, even if it came back down, even if we eked out some new potential lows. Look at this. If we pull back into this area, what do we got? We got a potential double bottom on a weekly basis. This is where I'd look to start more aggressively building a core position on daily signals and stuff. Why? Because on the next run-up move, like when this thing eventually, if this double comes to fruition and plays out, especially next year, this is when if I get a, let's say we're building a core position down here. All right, and then build, and then it triggers a massive double. And I'm not just talking Intel. Let's just use it, pretend it's generic stock 101. What happens if you're building a core position? Look at this on a weekly. Out of the way of the weekly rotation zone. You get the weekly rotation zone to trigger. What do you think? Do you think, hey, and you can still add more on the way up, but then you get to ride it. Then you get to ride it higher because we got the probabilities in our favor. So not only do you get the dividend to help you out, and this thing drops these low areas, you get dividend's going to be back to 6% as you're building a core position. Then you get that double to potentially trigger. And again, it doesn't have to trigger. It could become invalidated, but these are things I'll watch for. It's technically not even a double yet. I was just using it as an example. So now I have a way to ride a core position higher. And you map out your core position before you start building it. You don't say, I'm going to just I'm buying 1%, I'm buying 1%, I'm buying 1%, I'm buying 1%, I'm buying 1%. Pretty soon you're up to 30%. No. You say, I'm allocating this much to the stock and I'm going to pick some up at either key daily pattern triggers or key bottoming pattern triggers. And I'm going up to my max allocation. If we break critical levels, I can lighten up and look to re-add at lower levels. You take a quick stop on something if key levels are broken, and then you look to add lower again and build it up. And then once you get that long-term bottom in play, you ride, you get the dividends as it's rallying. You get to ride that core position. You don't unwind until you hit some very key upside targets. You know, because longer term, will this reconnect at some point? Now, this weekly moving average, this weekly 200 will come down. But at some point, Intel's going to reconnect with the weekly 200. Let's say the weekly 200 comes down to this 50% level before it gets there. You know, because you have price going up. Your average price comes down. This is where, now let's even say from the point the double triggers, where you waited to build a position to up here. I mean, once you get some key things trigger, I mean, not only are you getting a dividend, you could potentially have close to a 50% gain with collecting a dividend. Again, not investing advice. I'm just using this as an example. Now, that's long term. That could take until maybe the end of next year or sometime the year after. But you get that kind of return while collecting a dividend, that can really help a portfolio with a very low risk play. You still know where your stops are, though. You still know where your stops are. For example, let me go on one other example, then I'll wrap it up for today. I'm just trying to do some teachings for people because I think there's going to be, especially possibly the second half of next year, more stocks that are in a position like this. More stocks to where we're going to want to look to build core positions, and then you're going to ride them for a while. All right, for example, if you're, let's say you were trading around a core position, all right, I'm grabbing some, you know, getting out in rallies, grabbing some, getting out in rallies, grabbing some, getting out on a little rally. Grabbing some even. What happens here? What's happening here? From a long-term perspective, what was this? Major support. So yeah, you're building back to your core position after taking some off on these key rallies. But what happens here? Crap. We just closed on a weekly basis below key support. I'm lightening up. Yeah, I'm taking a little loss, but I've been harvesting some price action up here. Take a little loss. Wait for the bigger pullback. Wait for the bigger pullback areas. Like I said, when we were down here, In October, I pointed this out. A great area to even do some cash secured puts. We rallied. I didn't say hold it forever. Again, I can't give you specific trading advice, but I said it's a trade around the core position. I looked to unwind it on rallies. On pullbacks. Why? Does this have to be the long-term bottom? No. Could we go lower? Yes. But guess what happens if we start coming down and really invalidate this 24 area? I already have a next key major area highlighted down here, around 21. You know what dividend it would be paying around 21? Would it? Yeah, you lighten up. You can keep something on because it's paying a dividend, but I'm lightening up. Hey, I want to build a position back down here again. And then look to harvest it. If we get a major market collapse, first quarter, could it hit 21? Yeah. But that's fantastic. I don't want to just be dollar cost averaging all the way down. This is what I mean about trading core position. You still keep stop losses. You still get out of something if key levels are broken. And then you're patient. You stock the stock. You stock the stock. You get a nice buy signal. Get a nice buy signal. And you're off to the races with building a core position again. Like this was a weekly %B buy signal right here. Got to run it up for a few weeks. Take some off. Weekly rotation zone. Rotating back down. So this is where you can start watching for this. And even if, over the next few months, practice this kind of stuff, even on paper. Practice it. So when we get the overall shift in the market, because at some point the market's going to turn again, and we're not going to be fighting a substantial bear market. You're ready. Your portfolio's ready. You've studied. You've figured out your stocks that you want to target. And you've practiced. Okay, let me learn this trading around a core position a little bit. Let me practice some of this. Let me try to figure out what signals I want to use, what key levels I want to use. So when we get to a really higher probability market bottom, we can take advantage of it. And then you can be in a really good position as not only a trader, but an investor. Because I think just putting it into buy and hold even at the next market bottom isn't going to be a wonderful solution. There will be longer periods to hold, but I think we're in for a number of years of some still substantial reversals. We might get a couple year run, then a couple year pullback, couple year run. So it's my advice is you're not just going to treat it like the last few years before this bear market started of, I could just chase things higher and they're just going to keep expanding in multiples. I think it's going to be a little more challenging than that. So you're going to have to learn some more advanced techniques from my perspective. So now's a great time to start learning them. Hope I didn't go over or bore people or go over people's heads or, I'm just trying to share some knowledge here. Hey, thank you, Dave. Thanks, George. Hey, Charles. Glad it's interesting. I don't know many people who teach stuff like this. This is not a lot of people talk about. There's a lot of professionals who know how to trade around the core position. A lot of pairs traders know it because you have to trade around a core position in pairs trading. Not a lot of people, and it's an art that's been lost over a number of years. But I think it's a wonderful art to learn. Hey, Dr. M. So that's what if I could give anybody advice besides learning, continuing to grow and learn as a trader slash investor all the time in these markets, because if you can survive these markets, you'll be well suited. Learn some stuff that's going to prepare you for when we get the next big turn. Sort of my gift to everyone this holiday season. By the way, anybody celebrating Hanukkah, happy Hanukkah. It started. Christmas is coming up. If you celebrate Festivus, there you go. So this is a little extra teaching gifts, but I don't just use the holiday season for that. With that, I think I'm going to wrap it up for now. Let me know what you think. Come back if you like this and leave some comments, because maybe some other people will get it. It'll get put out there more, and maybe we can help some other people learn, or at least consider some other stuff. And if they've been burned in penny stocks or some of these pump and stump stuff that's gone over the last few years, maybe they'll learn a better way to potentially invest and or trade and be able to recover some losses. I know some people in here have recovered substantial losses and avoided substantial losses from the learning in here. Festivus for the rest of us. Exactly. All right. I'm going to wrap it up. I will be back tomorrow morning. Thanks, Jacob. Thank you. Well, Charles, keep tuning in. By the way, if people want to support the channel, join the channel. If you want to do something beyond that, you can always do a super chat, do a Patreon, or buy me a coffee donation. It goes straight back into the channel. All right? It does help the channel out. With that, I will talk to everyone later. Have a wonderful evening. Just think about what we talked about today and come back this week with some questions if you have it. Bye for now.